Welcome to the Mortgage Rate Weekly Market Update for the week of November 21st, 2016. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, last week, again, mortgage rates moved higher, end of the week higher, all-time record high rates for the year of 2016. If you take a look at the bond chart on the screen, again, you can just see mortgage bonds tried to find a level of support early last week, but then on Thursday sold off, and then Friday just broke through the floor of support. Went through the next floor of support at 103, as you can see there, and stopped right at the next floor of support at 102.719. So again, just not much stability in the bond lately. Traders are just dumping them, and mortgage rates are just spiking up. So with that in mind, even though we're at another level of support, it's not a strong level of support. Sentiment in the market has been for the bonds to continue to sell off. One of the reasons is the Treasury yield keeps moving higher. As that moves higher, interest rates are going to move higher along with it. So we're going to recommend you lock your mortgage rate to start the week. Again, lock your mortgage rate. Rates could probably get worse before they get better. And getting back to where they were before the election in the mid-threes is probably not happening. So just forget about those rates. Take what you got now, lock in. You can still get an awesome rate. You're in the low fours. Great time to buy a home. Home prices are looking to appreciate again for the next 2 years. So go ahead, lock in your rate, get out there, find your perfect home. If you've been looking at refinance, if it still makes sense, just jump off the fence and go ahead and lock your rate and move forward. Now, in economic news, we saw the retail sales for October 2016 rose by 0.8%. That was a very good reading, and that could signal a good holiday spending season from consumers. Now, retail sales are up 4.3% year over year, and September and October were the best 2 months since 2014. So great news there moving into the holiday season. And then we saw two measures of inflation last week. The first one was a measure of wholesale inflation, the Producer Price Index, or the PPI. It came out flat, so almost no wholesale inflation. So that's good news for bonds, even though they didn't react to it favorably. And then we saw the Consumer Price Index, the CPI. It came out timid. It was up 1.6%. And then the core, which strips out energy and food, was actually up over 2%, which was the Fed's target. So with that in mind, that's given some impetus to the Feds to raise their short-term Fed funds rate in December. Janet Yellen released some words last week hinting that they were going to raise the Fed funds rate sooner rather than later. So there's over an 80% chance the Feds will raise the Fed funds rate in their meeting December 14th. So we'll keep an eye out on that. Week initial jobless claims, unbelievable. Dropped 19,000 claims to 235,000 claims for the week. That's a 43-year low. Unbelievable. Marks the 89th consecutive week of claims below 300,000. That'll also be the sample week used for the November jobs report, which will come out the Friday after the holiday week. So we're looking for a very good jobs report. Again, that could boost stock market. Would be bad for bonds. We could see bonds sell off again after that. So we'll keep you updated as we move forward on that. And then in housing news, some very good news there on new construction. We saw the housing starts for October 2016 surged higher by 25.5% from September. Was the highest number since 2007. And housing starts are up 23.3% from October of 2015. Now remember, housing starts measure the number of new homes that home builders have started construction on. So we're going to be looking at some big sales coming through in the next 4 to 8 months from those homes being completed. And then building permits were up 0.3%. That's a sign of new construction. So all in all, again, a great report for housing showing a strong home builder market. So that's going to put price appreciation into play. So that's why we're predicting, again, home prices to continue to move up, at least for the next 2 years, if not longer. In the local news, the next free first-time homebuyer seminar is Saturday, December 17th in Newark, Delaware, from 10 a.m. to noon at the Christiana Hilton Hotel. And then the next one in Dover is in the new year. That'll be January 10th, 2017. You can register for that online. www.delawarehomebuyercenter.com, or you can give us a call in the office 302-703-0727. Look forward to seeing you guys next week.